Good morning or afternoon, everyone. I'm Chris Jackson, your host, and with me is Josh Thompson. Today, we're going to talk about tax planning, a very hot topic right now with everyone doing their taxes. Today, Josh is going to talk about how to get your taxes done right and some of the tips and tricks to have in getting them done quickly and efficiently. So to start off, Josh, first off, Josh is an accountant. He owns his own firm called Thompson Tax Group,
Oh, yeah.
and he's been doing taxes for quite some time now, and he does a lot of different strategies with that. I'm Chris Jackson. I work with financial planning and insurance and help families and businesses be able to create a financial game plan. So, as I said, we're going to talk about taxes today and just get some general good advice. So, go ahead, Josh. Let's start off with what are some good quick reminders or tips that you can give to the audience with regards to tax planning?
Yeah, let's just hop right into it. So really a good checklist to kind of keep in mind reminder-wise is that W-2s and 1099s. A lot of people don't remember or don't know when they're actually released. They're usually out by January 31st. That's the required deadline for them to be out. This year it's February 1st. But a lot of people, every now and again, you'll see them wait maybe a week to get it out, but you want to make sure that they're out, and you should have them by January 31st this year, February 1st. Also, kind of keep in mind that your personal taxes as of now are due April 15th. Going back to the consistency of that, they haven't talked too much about extending that to July 15th like they did last year. So right now we're looking at about April 15th. And then business taxes are due if you have as corporation or partnership. They're going to be due March 15th of this year. So far, they haven't talked about extending that either. You always want to get your business tax return done and in before you complete your personal tax return, because often you'll get a K-1 or any documents that flow through to you and can affect your personal tax return really first. So you want to make sure you get the business tax return done before you do the personal tax return. So those are kind of some quick reminders to keep in mind for you thinking about tax season getting started.
Great, that's awesome. Good to know. So let's start with some of the checklists. So I guess you could just break down really briefly what are the things in the checklist, and then we'll go into more depth.
Yeah. So I have 5 main things for you guys today to keep track of in tax season or throughout the year too. First thing would be is if you're a business owner, where is your bookkeeper and accountant? The second thing is throughout the year, you should list documents, tax documents that you're expecting to receive. The third one is complete a tax organizer. The fourth one being have savings for taxes. And the fifth and final one would be schedule a time to get your taxes done or sit down with a tax professional. And we'll dive a little bit deeper into each one of those as we continue throughout the session today.
Awesome. So let's start off with number one. Just jump into it.
Yeah.
Where is your bookkeeper and accountant? So share a little bit more about the importance of a bookkeeper.
Yo, it's huge. A bookkeeper or accountant is big, big, big to a business. You want to know your numbers at. One thing that you'll find is a lot of bookkeepers, they say they're working on your books, or they say they're right there, or they're only like 2 or 3 months behind. You really want to check in with them monthly to see where they're at, where the progress is going. And a real good rule of thumb is to never let your bookkeeper get more than 2 months behind. And I say 2 months only if they're actually have a tax season or they're crazy during tax season. Anything more than 2 months is excessive, and you should either get on them or think about finding another bookkeeper. I have a client that wasn't on top of their bookkeeper and ended up getting a 1.5 years behind, couldn't file tax returns, then didn't know where the business was at income-wise, couldn't get the PPP loan, and it was just a huge mess trying to get that bookkeeper to fix everything. And when they finally did, there was so much going on, the bookkeeper actually just told them, hey, I need you to find someone else because it's too much work at this point. So be careful of that with your bookkeeper and accountant. And then also, if you're using one of the automatic services for bookkeeper, just know that it's not always automatic. You still have to reconcile your bank account. You still have to make sure certain expenses are capitalized correctly, are depreciated. And then when you have a loan payment, allocate that correctly, because not always that's fully deductible. And then the final thing is, if you are a business, make sure you get those 1099 and W-2s filed by the deadline so you're not hit with any penalties or interest on top of that as well. So check with your bookkeeper if they're the one doing it for you to file that 1099 and W-2 by this year, February 1st, but usually January 31st every year.
Great to know. Awesome. So the next one is list some of the documents you're going to be expected to receive during this tax season, which is upon us now.
Oh yeah, oh yeah. So this is a good tip whether you're in tax season, whether you're going into tax season, after tax season, whatever it may be, is always know or keep a list of what documents you expect to receive throughout the year. If you know you're doing stock transactions, trading GameStop and made that big win, you should be receiving a 1099-B or 1099 dividends or interest throughout the year. So it's good to keep that checklist. If you know you worked 3, 4 jobs, every time you work a new job, go to that checklist and put, okay, I'm expecting to receive a W-2 from this job or this job, or if you had childcare expenses, do the same exact thing, or if you went to school. Those are kind of a quick few things. You want to make sure you have that list, because the last thing you want to do is file your tax return, be missing something like a 1099 or something like that, then get a love note from the IRS saying you owe taxes, even though you don't owe them, you just didn't file it correctly. So it's always great to have that list and make sure you check it off as time goes on.
So on that note, with people investing in stocks or cryptocurrencies and other things like that, if you keep it in the when is it? At what point are you going to actually have one of those forms? Is it every year, regardless of whether you take gains or if you keep it in? You're always going to get one of those. And when are you actually going to owe taxes on that?
Yeah, Chris. So that's a good question. So usually it's when you sell that stock position, you'll owe taxes on it. Or if you receive dividends or interest, you'll also receive a 1099 interest or dividends. So those are really the big key times where you'll need to keep an eye out for that 1099 to report on your tax return. But it's mainly when you make the sale of that asset.
Good to know. So that keeps people and keep in mind if you want to put money in something and then cash it out so you don't lose, you could be getting a big tax hike. You might want to consider keeping it in that account and maybe a cash asset in that portfolio, right? And is that a way you can have a loophole if it's in cash in like the account, not actually taken out in the general marketplace?
Yeah, so unfortunately, it's when you sell it, whether you leave it in the account or whether you take it out, you got to pay that tax. But a lot of times, what you could do is there's strategies on basing on your income limit where you may not have any tax on capital gains. When you're, in certain capital gains are really income bracket, you don't have any tax due on the capital gains. I think that may be a good episode to do in the future, talk a little bit more about, because that's a great way to use your tax bracket to pay less in taxes. You just got to know where you're at and what your income limits are.
Cool. Thanks for answering that. I think that's some good information.
Yeah.
Number 3 is complete a tax organizer. So maybe talk a little bit more about your tax organizer and how that works.
Yeah, so any tax professional can send you a tax organizer, and they're free. They're just basically a PDF that you can fill out, answer some questions, and really what that tax organizer does for whether a tax professional that you're working with or for you if you're doing your own tax preparation is it jogs your memory of what documents you may need. It answers yes or no questions to determine what credits and deductions you actually qualify for. So it's always awesome to just reach out to a tax professional, ask them for a tax organizer, or just do your own tax organizer and remind yourself of what documents you may need, and then ask yourself, okay, can I qualify for this credit? If this is a yes, if this is a yes, okay, I can qualify for this credit. Let me put these numbers in the correct areas so that way I get credit for what I'm owed. So it's really important to find a tax organizer, use a tax organizer, and use it to your advantage. You don't have to work with a tax professional to have a tax organizer, but a tax professional is a great way to get a free tax organizer. If you guys want one, feel free to reach out to me. I'm happy to email you one that I send all my clients that you guys can use to help work on your personal tax return, or if you guys want to work with us to help out as well.
Awesome. So having savings for taxes, talk a little bit more about that.
Yeah, so I think this is a big thing that a lot of people don't. People will save for a lot of other things, but a lot of times they don't save for taxes. One thing I recommend is if you have a business or even a W-2 is sometimes to set some money to the side to save for taxes. If you have a business, the rule of thumb they say is about 30 to 35%. Now, that's not always the case depending on your business. Sometimes it's lower, sometimes it's higher depending on what you have going on, but at least put some money aside for taxes. If you have net income of $100,000, you may want to put aside about $30,000 for taxes. Will you need all of it? Maybe. Maybe not. We don't know for sure until we do either a tax projection or actually file that tax return. And then another one is you want to know, for a lot of people out there, is that unemployment is taxable. A lot of people don't know this. And in some cases, your state actually tax unemployment as well. You know, California is not one of the states that tax it, but Arizona, Utah, Colorado, New York, they all tax unemployment. So you either want to have that withheld or at least have some money on the side, because other income that you're receiving can be taxable. Kind of like those capital gains, you still have to pay taxes on it, even if you didn't receive the money just yet.
Gotta love the IRS. Always.
Oh, yeah.
Uncle Sam always getting something out of you, right?
Yeah, they always get theirs, put it like that.
Yeah. You leave the military, but you never leave Uncle Sam, right?
Facts.
Hey, number 5, so schedule time to handle your tax preparation. What is the optimum time I know it's a trick question because you don't want everyone to come at the same time, but
Yep.
what would you say if you were someone that was coming to do your taxes? When would you want to come into the door to get your taxes done? What's probably the optimum time?
First day it's available, really. That's usually the rule of thumb. And one reason is because if you're working with a tax professional, the sooner you get it in, the better, because that way they can get yours done, knock it out. You can get your refund faster or figure out what position you're in. That's usually the best case. Or if in the event that, let me see, these entries. Just rereading my notes, want to make sure I touch on everything. But it's really the sooner the better. The IRS also recommends that you get it in earlier, because if you file sooner than later, you can also beat the person if you ever have ID theft or anything like that. We all were in that case, about 2 or 3 years ago with the Equifax. A large number of my clients had ID theft because of that. Someone else filed a fraudulent return. You want to file earlier to beat them, just in case, so that way they can't file your refund or claim your refund or whatever it may be, and then take whatever you're owed before the IRS. So it's best to get it in sooner rather than later.
Good advice for sure. So final thoughts, Josh, before we wrap this up about taxes in general.
Yeah, just really keep your documents. That's one thing I'd always recommend, is keep your documents, because some of you guys may know the IRS has statute of limitations where they can go back up to 3 years and audit you, and the burden of proof is on you, as meaning you need to show proof of your expenses. You need to show proof of a W-2 or any other document you have like that. So make sure you retain your documents and have them, because even though it's been 2 years and you got that refund, the IRS could still come to you, audit you, and say, no, we're denying this, or we're adding penalties and interest on this. So that way, they get their money back. Because like we said, they always get theirs.
Yeah, for sure. Well, thanks for going over that with us today, Josh. If anyone has any more questions, feel free to leave it in the chat. We'll be happy to monitor that and get back to you as soon as we can. And if you are in need of a great tax professional, Josh is your man, so give him a call.
Oh, yeah.
And he's got his information at the beginning of this presentation as well. So feel free to reach out to him or me if you have any more questions. And thank you for joining us. We look forward to seeing you during our next event.
I appreciate it.